This level of corruption and manipulation is insane. We've seen the markets capitulate over the last couple of months, going down 21% for the S&P 500, and in the last 24 hours, the entire bar's day was 13%. Open to close, 10% for the S&P 500, for the NASDAQ around 12%, for the Dow Jones around 8%, and it was published beforehand. Now, this has all happened on the back of Trump announcing a pause on tariffs, but 3-4 days before that, there was a leaked news post that Walter Bloomberg picked up, putting it on X on Monday before this happened in the last 24 hours. Trump is considering a 90-day pause in tariffs for all countries except China. Of course, what does Trump do? He says it was all fake news until he posts this 3 hours before the pump. This is a great time to buy. This is 3 hours before the pump. Next, we see Trump increase the tariffs for China, reduce all the other tariffs for the rest of the countries back down to 10% across the board. And basically, it's been questioned whether he was doing this to get the headline, one of the biggest gains in Wall Street history. And of course, he couldn't help himself. He had to do it. Trump on the market going back to below where it was last week. I guess they say it was the biggest day in financial history. What else has he said? Why did he do it? Everyone was getting yippy. You know what they're saying?
Well, I thought that people were jumping a little bit out of line. They were getting yippy, you know? They were getting a little bit yippy, a little bit afraid.
They were all getting yippy, you know? They were getting yippy and a little bit afraid. I don't know about you. I was definitely yippy, a little bit afraid there of what Trump would do next. The flip-flopping continues from Trump and Wall Street. You think analysts, investors, traders, flip-flopping? This is freaking Wall Street. 2 days ago, they said, Goldman Sachs said there was a 60% chance of a recession this year. They have rescinded that and flipped. JP Morgan did the same thing. Recession, 60% chance, and they flipped. That's one thing I have not flipped on. I did not say there was going to be a recession. And even if there was, I'm still looking at the prices increasing for this year, 2025, based on the cycle. So if there's one thing that we continue to work with for hundreds of years, it is the 18-year cycle. And I'll get to that in just a moment. But the flip-flopping continues from the president, the manipulation. This is clear now. It's clear manipulation. This is a great time to buy. And of course, there's going to be the haters to this that say, no, it's all real and this is his 4D chess game and it's all part of this 1000 IQ thing that Trump does. It's really not. But that's beside the point. We want to focus on the charts here as well. So next up, we have the data points, the charts, the data. Let's get into it after the absolute mayhem that has been the Trump presidency. Here are the data points. Today was the largest point gain ever for the Dow. And of course, Trump has talked about that. He did bring on the largest, quickest dump that we've seen since basically the Great Depression. But 1,000-point gain for the Dow, 1896, biggest point gain because, of course, the markets have continued to grow. Therefore, the point gain is going to be the largest. Just like whenever there's going to be a collapse, it is potentially going to be the largest collapse when you look at the points, when you look at the dollars. Of course, we just saw 6 trillion get wiped out in a matter of weeks. And of course, now in the last 24 hours, we've seen some of that come back on, but is at some key levels right now, as we'll get to on the charts as well. 3,000 there for old Mr. Trump. But the day before, this was when JP Morgan and Goldman Sachs were basically calling for a recession. Dow 15% in 2025. Now what? S&P 500 went down at least 15% year to date. So the percentages suggested that there would be further downside after that point. Now, this is just basically the flip-flopping, as we've talked about with the president, with Wall Street, with the markets in general. And we've got these on the charts. So year-to-date low, you've got all of these figures here. You've got the years here. The years that were positive were 1982, which was the mid-cycle of the 18-year cycle, which peaked around 1989, 1990. And then you also had 2009, which was the bottom for the stock market. Of course, that's going to be up from that point. And then 2020, obviously COVID, massive dumps, huge bounce back with all of the money printing. One of the largest spikes on the VIX, the volatility index. Now, the only other times in history that it has been this extreme was the GFC. You can see on the chart here, and the reading going up to around 80 or 90 on the VIX. Same thing for the COVID crash, around 80 points. And then what we've seen recently, it did jump to about 60 points. And 3+ consecutive closes has basically led to a bottoming. For the end of the last real estate cycle, which happened around here in 2005, and then the stock market tops after that. So real estate and the economy tops first. The stock market generally keeps running because it's made up of financials, tech, and so on. They still have a little bit left in them before the thing rolls over. This was the time that it was basically taking a lot longer to form this low. Of course, it's the end of the cycle. The other time that it's happened was in the mid-cycle, 2020, huge dump and then a big spike out. Now we find ourselves somewhere towards the end of the cycle. So I guess you could ask the question, it'll be a valid question, could it be something like 2008 into 2009 when this low started to happen? You know, is this just the beginning and we have bounced and we continue to head down? All of that is valid, and that's why I need to go back and look at the charts to identify the levels. And we've got that 50% level that the S&P 500 closed above, and that was around 5,500 points. So was China going to print more and basically get their currency down a lot further because of the tariffs that Trump is putting on China? Not yet, by the looks of it. Basically, they're fixing it here. And as he said here, it's just very gradual weakening of the Chinese currency. Next up is the cycle. Here we are, winner's curse. This has been the case for the last 14 or so years, all the way back from the low at 2011. We find ourselves in 2025, and this is where the peak occurs, around 2025, 2026. And of course, the dump we've just seen on the market was not land induced, it was tariffs. So the end of the cycle is still not hit yet. It doesn't mean that it's not a time to take profits, especially if you've been holding in for years. Doesn't mean that you need to just sit here blatantly waiting for some peak. As I always look at, you just want to take a chunk of profits out of the middle. And if that middle happens to be pretty damn significant for over the several years, you know, the 14 years that this thing's been going up, fantastic. But if you're getting into the game later, then this thing just gets riskier and riskier, basically as per the cycle. When you get into this winner's curse phase, the volatility increases. So in that case, it's prudent to be watching what's going on and having stops in play, because you just don't know at this stages how these swings are going to form towards the end of the cycle. The lows, as I go on about, are so much easier. So if you want to make a long-term play at the markets, a long-term play at investing, definitely remain with the markets. Watch what's going on day to day and have a plan. TIA Premium goes through this in great detail. A link for that is in the video description. Along with that, we also have TIA Indicator Suites. Now we're looking at the predictive cycles here. And as we've been following on with this cycle, the low, or a low for 2025, as per 10, 20 years and a couple of others that we also track, tends to come around April and then bounce through to about May. Sometimes we get it to go into June, but generally we're going to get this move up and then another drift off lower. So that's what I'm looking out for in Q2. That's basically been what we've been watching now for months, going all the way back into January. 2025 was going to be a bit rough. I did not know it would be this rough. I don't know anyone that knew it would be this rough. I just was not expecting it to be so clean after those 2 years that we saw it really, really well. I am still looking at a positive close to the end of the year. It's hard to say it at this point, but that's what I've been looking at for 2025, and I posted about that in December 2024. But sticking with the cycle here, a low is expected due in April, just looking at the cycles alone. A run up and then a bit of a pause again. And I think that's the possibility, because I don't know if Trump backflipping on his tariff announcements here is enough to bring the confidence back into the business market, and that might take a little more time, which is what the cycle is also suggesting. On with the confidence, and it's increased slightly, still an extreme fear here, but we got down to 3 for the S&P 500. There it is at 3. It was at 5 for the day before, and now it's jumped to 17 with this 10% jump on the S&P 500. So is that enough to get this thing across the line? Well, no, but it's a very, very good start because the close was above the 50% level, 5499. You know, in yesterday's video, we were looking at where that 50% level was, what the market had to do in order to get back into that first stage of strength. And that is above the 50% level of the decline. So the swing low was 5509, the 50% level is 5499, and yesterday's close was 5513. So it closed above both of those. Now that's just one day's close. We need a couple more of those to see the strength come fully back, unless this is just another one of those sort of news days that Trump says something, the market jumps and then fades out. We've all seen those before, especially on Bitcoin. A number of times since Trump's inauguration, that the markets have basically jumped on some sort of news, as I'll get to in a second with BTC on the charts. But really just covering off here with the S&P 500, the lows have come in for the time being. And as per the cycle that I'm looking at here, this could be that low that we then rally up into some form of whether it's a higher high, lower high. We just don't know yet because this is where we currently sit. The highs have not been taken out. The next high is at 57.83, and then the next tops here, which are the next very, very important level, 58.40. So for around 58.40 is where these closes have to get to, and the swing to break. This is to break this the downtrend here. So that's the levels for the S&P 500. For the NASDAQ, for the Dow Jones, before we get to the NASDAQ, got to get above 43,200. At the moment, it also closed above the 50%. By a few points there, so that's really a good move on the daily. And for the NASDAQ, it closed just below the 50% levels, and this swing top before the market fell out of bed was at 20,000, call it 600 for a nice round number above that top. So it's got a little bit of work to do here, but at least there's a nice strong bounce there. And on each of these occasions, it came down, broke the August low, tested the 2021-2022 top, this was through the money printing top, and has bounced quite significantly from here. Granted, it is only one day on all accounts. For the S&P 500, it also did the same. You can see the low that came in here, which was very close to the previous old all-time high of January 2022. So again, using the previous top as support, just like it did in October 2022, finding that low. It was just above the pre-pandemic top, and it also retraced to 50%. Take a look at the low to the high, and it came almost dead on the 50% level. And now I've had a comment from you guys, the viewers, just saying if we could break things down a little bit more simply with the charts. I'd love to hear from you in the comment section. I'll leave a pinned comment there so that I can get your feedback when it comes to the charts. What in particular do you want to learn more about here? And if you do want to take it further, obviously TIA Premium is the place to go so you can learn about charting. So in this case, it's on the 50%. This just means that we're looking at a balanced correction into strength, and any of these moves out of it, how do you actually use this? Is that it gives you an opportunity to buy into strength while the masses are still fearing the markets. So it's basically getting you into that confirmation. I'm not trying to pick the exact low or buy the exact low. I just want to see signs that the market is balancing out, and then we might see some furthered strength, but before the masses think about it. And the masses really get into it at the tops, and then they try to buy the dips on the way down. That's what happened back here. We saw the largest retail purchase of stocks in history, nearly $5 billion, just before the market collapsed 12%. Speaking of retail stocks, MicroStrategy. How has MicroStrategy fared on this news? Beautiful day for trading there. If you're intraday trading on your 15-minute charts, 25% move in a single day, closing above a major 50% level, but still below the 320 and a couple of other levels here. Now, I think this thing could go a little further, especially if Bitcoin gets up. I've said many times before, it seems very unlikely that it's going to break into a new all-time high. Other people have differing views there, but this is still playing out very, very similarly to last cycle, which is what we were having a view here of for the timing of the end of the cycle. Just something interesting to note. Doesn't mean we have to stick to this 100%, but you can see here, this was the 9 months from the top, gives us a date of around August 2025. Last cycle, February peaked for MicroStrategy So that was in February 2021. Bitcoin peaked in November 2021. It also had a lower high in November, and that's where basically the bear market began from for BTC. And that's why I've measured this here. 273 days, basically in 9 months. And then we start to break these moves down a little, into smaller time frames. And it's extremely uncanny how it works quite similarly. Not exactly, but quite similarly here. This particular move was one of the largest moves here. Now, speaking of moves, we've got to get to BTC and looking at the overbalance in time and price. And I'll cover those off for the stock markets in future videos. Are we seeing a sustained rally here, a more confident change in trend, or is this just another news-based piece of manipulation from the president and then basically just gets faded out from that point? But back to MicroStrategy. Low to low, 42 calendar days, because of course they don't trade on the weekend, which would be 29 trading days, 42 calendar days. Lows, and you got these little double bottoms here, but this double bottom, 42 days. Okay, come across to where we are today, and the time frame from a double bottom low to another low here, roughly around 39 days. Pretty strong move away. Similar period, give or take a few days. This is about 4 years later, of course. And if this thing starts to break higher, then you've got a very similar double bottom pattern here again. So extremely uncanny how this thing continues to work out. And that's why I keep this on the chart to warn us sometime in Q3, could Bitcoin be putting in a top around that time? Is it going to be a higher high than 109? Is it going to be a lower high? Essentially some sort of timing towards the end of the move overall. Speaking of moves, we've got the US dollar. Had a very significant dump and then bounced from this point. Bit of volume coming back into it, holding steady at the 50% extension, but still under the major 50%. So the extension here is a look at price targets for any sort of trading possibilities to the downside, and then also probabilities of whether we would see a bounce. So usually 50% are an area that you could see possible bounces because you're getting some resistance at them. In this case, support because it's to the short side. If it breaks down, then the chances increase to go back towards these lows around 199. Otherwise, if this holds up, more chance that you're going to see this top break. So that's how we're using those here, and then come up to test around 105, which is the 100, the 50% level of this particular move. As for gold, also had a pretty big day here as well. That was 3.4%. The 1, 2, 3 days down inside, and then a reversal. The volume, very strange here. Maybe we've got to get a bit more data come through. Sometimes over the coming hours or days, the volume will get revised. But as it stands, that is a low volume bounce considering where it's come from. And as for the 3 days, it's worked out before. That's just held the market down for a shorter period of time here. In this case, it held it down for 17 days before it was able to break out. And each of these other moves on the way up were a day or two. So that was what the 3 days was able to do here. And it seems like we could be in for something like that. As for oil, it's also had a very strong bounce. However, still underneath a very key level, $65. So that's basically what the market has been supported on over the last couple of years. Big breakdown there. If it can get back above 65, then this was all a bit of a flush out. Otherwise, if it's rejected at 65, then you could expect lower prices again for oil. And for the fear and greed on BTC and cryptos, fear and greed's at 39. So the extreme fear has basically been washed off. Remember the timeframes that we're watching here for BTC. And I'm looking out to the 5 months. So I talk about this on X, do some daily updates there. So go follow, the link is in the video description, especially on the weekends where I'll just post on X rather than doing videos. And the time frame is about 5 months. At the moment, we're only a couple of weeks off that. The date is about the 25th for us Aussies and Kiwis, Anzac Day. So about 2 weeks away from this exact 5 months. Of course, nothing is exact, but that time frame has helped each of the previous corrections on Bitcoin basically find some sort of low before the market begins to climb out of the inevitable shit show that it finds itself in. So BTC looking all right. Now, the overbalance in time and price is the major key level to watch here. We're watching for a higher probability change in trend from the downtrend to the uptrend. So listen up, here it is. Like, subscribe. This is the piece to watch. The largest increase on this downtrend, so the largest rally we've seen, was $17,000. Now, this is something that no one else does online. No one else. Overbalanced in time and price. It's a Gann rule. Unless they have followed Gann, they won't know about it. $17,000. The longest time frame is about 13 days. So we want to see this overbalance. Bigger gains to the upside and longer time. That time frame takes us out to about the 21st of April, and above $17,000 would take it to about $92,000. So if we look at the downtrend now, the 50% is almost, well, basically dead on that 92,000. It would break a couple of swing tops, but it hasn't met all of the criteria. Now, I'll get to those later. If you obviously want to bring this in, or if you are a TIA Premium member and you're wanting to study this more, there is a masterclass that has just been recently uploaded. So go to your dashboards, check out that masterclass and learn how to implement this for your trading portfolios and your long-term investing as well to identify these major changes in trend. So the 50% levels at 92,000, and then the diagonal here is at 93, 94, 95-ish, depending on which day it gets there, because the diagonal continues to rise, just like a moving average would over the days, depending on what time frame it gets there. If it was today, you'd be looking at something like 93.5. If it happens in a couple of weeks' time, you're looking at around $94,000. And that would also take it above the 50%. And then the big day here on the 2nd of March, I believe it was 95,000. So the importance of that is that Trump tweeted about the Bitcoin strategic reserve, when in fact all they were doing was just going to hold the Bitcoin that they already had rather than buy anything. Then you got the big news failure on that news. Therefore, Trump basically screwed with the market again. And prior to that, there was some other news here on the 3rd of February, big bounce, and then a failure. And then, of course, the mother or king of all news failure events, the top. That was the 20th of January, the inauguration day for Trump. So basically, Trump gets inaugurated, biggest Bitcoin crypto president of all time in history, and huge lower close, failure to rally, and then basically lower highs the whole way down. So that's what we're looking at for next. Are things going to turn? Judgment Day is coming. We're looking at this in terms of the price charts, the time, and the market sentiment. Lots of things to continue to layer upon here, which is just a good reminder. If there are things that you want to learn more about, let me know. Pinned comment down below and leave your comments down there. Moving on to the US dollar or USDT dominance. Big move up, failure, and then yesterday actually, well 2 days ago, closed above it, and we got another failure. So good sign so far. And then I would implement the same tool again, overbalance in time and price, looking at longer time down and longer price targets down. So ideally somewhere around 5.2 to 5%, and then we got to break the 50% level. If this happens to be the top, then we got to apply our 50%. Taking a look, that comes in at around 5%. So it gets very close to the major 50% at 4.7%. You can see right here. So that's going to be a very tricky time. Rock in a hard place once it can break 5%, and then the next level is 4.7, and then you pretty much have a nice clear run back to any of these low prices at 4, 4.2, 3.7, right? But for now, really looking at one step at a time to get us to that weaker position on the USDT dominance. And what's happened to Ethereum on this major market manipulation corruption day? I mean, as they say, crime is now legal with Trump in the presidency. May I remind you again, he did post this 3 hours before the market pumped, and some people even bought on this with the insider knowledge. Okay, I'll just leave it at that. I know it does trigger a few fans of the man, but nonetheless, we're looking at ETH now, Ethereum, the crypto that Eric Trump told us to buy. What price was it? Let me know in the comment section. Somewhere around 2,500 or 2,800. Told us to buy there on a tweet. Okay, so it's up now 13% from this low. Hasn't broken the swing chart. So that's the important one here, looking at your Gann Swing Pro. 1 day chart is down. 1 week chart is also down. So the trends are still down across the board. I don't know about you, but trying to buy the dips for Ethereum, each of these times it's seen any sort of low has basically resulted in lower and lower prices. So I know there are a lot of people out there trying to capture these lows. There's a lot of pessimistic and FUD going around for ETH, but there still has not been a sign that the low is in. Is this the time? You could have said it was the time back in March, could have said it was the time back in February, could have said it was the time back in December, but it just keeps falling. So one day it's going to have the low, but where does that come? I don't know. And I would much rather just wait for the signs of strength. A key level of strength would be closes above the previous lows where it broke down around $2,100, $2,200. And yes, it's a long way from where it is now, but that is the price to pay for further confirmation, basically a higher level or higher degree that the trend has actually turned around. And then we would implement the same thing, looking at overbalances in time and price. What was the biggest rally that we've seen in this entire downtrend? What was the longest time that ETH has rallied in this entire downtrend? At the moment, you're at 1 day. So it's pretty much, that's the epitome and the definition of catching a falling knife. So I think this is the tough question now to answer. Is this going to be a news failure? Are we kind of going back to the normal before Trump went ballistic with his tariffs? I think it's going to be a mixture between the two. And I think, like we've looked at with our cycles, there is the possibility of an intermediate rally based on what's going on in the charts for the stock markets, for the indices, well, obviously the indices and Bitcoin and so on. Now, something else we'll cover in a video coming up would be the interest rates and the bonds again, as they've had a bit of a turn as well for the good. Hit the like button, subscribe to the channel. I'll be back with you with another video. And of course, go and check out the free crypto and economic report on the Investor Accelerator. So tiacrypto.com. We've got a trade email going out today on Bitcoin and XRP. I'll see you guys at the next video. Till then, peace out.